Okay, okay, everybody. Welcome to the Day Traders versus weekly outlook session. And tonight we're going to go over what the expectations are for the rest of the week of January 25th, 2026. So we have some pretty decent news going into this week. The big thing for this week is going to be the Fed fund rate, the interest rate. Right now, we sitting at 3.275 right now. I think that we will not get an interest rate increase. They're not actually predicting it right now. I think it's about 90% that will hold the same. This is the CME Group's Fed tool, and it's like gauges like how what they feel like the interest rate should be if it's going to be increase or decrease. So right now we were at like a 97% that we just stay the same. Right now the interest rate is at 3.75 right now. And basically this is saying that that 3.75 or 375 is going to stay the same. So that's basically what this is saying right here. The probability right now is sitting at 97.2%, and it's only a 2.8% chance that we do get a rate change, which would likely be a 25 point cut or 25 basis point cut if we do get a interest rate decrease. For those of you that don't know, what typically happens is that when you lower the interest rate, you increase spending and borrowing for people in the that are looking to borrow money, right? And this interest rate that the feds release, this affects the interest rate for homes, cars, automobiles. Well, cars and automobiles are the same, but personal and business loans, this determines whether those rates stay the same. So if you see that, the reason why this is so important, because if they lower interest rates on the Fed does, then they often lower those as well. And what that does is it entices, the expectation is that it will entice new people to spend money, right? And then it also says that not only does the interest rate get lowered, but the requirements to borrow money is lowered, and they need that influx of money coming into the market in order to push the market and keep it a healthy market, a healthy economy. And when you see people raising interest rate, it works the opposite way. It they want to take out the number of people spending, because essentially this is all supply and demand right now, right? When you look at the interest rates, think about supply and demand. When you lower the interest rate, you're trying to increase the demand. When you raise the interest rate, you're trying to increase the supply. You're trying to decrease the supply because you've made too many things and you have too many people trying to buy, and then you need to slow the buying down. So that's how you got to think about it. So anytime you start hearing people talk about the interest rate, that's what they're referring to. And this basic concept of supply and demand, right? And when usually what the supply, when it's a heavy supply, that means that we also have higher inflation as well. So they're trying to take down the inflation and lower the I'm sorry, I said that backwards. When you have a demand and you have, we're in a state where demand is starting to slow, yet inflation is still going high, right? So in our case, what the feds have been trying to prevent is, if we keep the interest rate higher, we slow down the economy so that we can slow down the inflation, right? And if we slow down inflation, that means the cost of things will come down. But we have someone that's trying to lower the rate right now while inflation is high. And what that does is it in it pushes more money into the market, and then that creates more demand. More demand creates the price increase. So it's like an opposite response to the inflation and the cost of living because it doesn't actually combat that. So that's one of the things we need to be looking out for, the interest rate. That happens on Wednesday. A lot of times before we get the interest rate release, the market is kind of trying to figure out what it's going to do. So a lot of times we stall out. Sometimes we pause. The market will be a little up and down for the until we get that release. So Monday we got core durable goods at 8:30. That's something you need to look out for. Then on Tuesday, we got Trump. He's speaking. We don't know what time is going to be. But he is going to be speaking on Tuesday. Let's see exactly what that's going to be. I
Yeah,
think that
when he speaks, the market be going crazy in the what direction.
yeah, yeah. What's up, Higgins?
Yeah, and I know he's been trying to. Hey, is Powell stepping down because he be trying to force Powell to lower the interest rates, and Powell's like, "Screw you, I ain't knowing shit."
I don't think he's gonna step down because he's due to exit in April anyway. So
Oh yeah, he's gonna exit. Yeah, because I know Trump been trying to make him force him to. It's like, nope, I ain't lowering nothing until the market till it's better out there.
it won't be a force out because it'll be in his term in
Yeah,
April. So they'll be looking forward to try to fill that role pretty soon. So he's gonna be, but he is gonna be speaking in Iowa. I don't know what conference or what that's gonna be, but um, so we'll need to just kind of pay attention to when we get some more details about this speech. Consumer confidence, anything below a 90, be concerned. 90 and above is is good. You know, they're forecasting 90.1, but once you start seeing this dip below 89 and 80s, then that's when you want to kind of pay attention. Wednesday, FOMC, um, FOMC and the Fed rate release. So FOMC, the in the meeting usually at 2 p.m. and 2:30. So that's what's gonna be for Wednesday. This will be our biggest news of the week. Then Thursday, 8:30, we got unemployment claims. And then Friday we got PPI and
it's a
PPI.
lot of red folders on Wednesday. That market's gonna move. I don't
Yeah,
know what direction yet, but
yeah, yeah. So we got a lot of news this week. We got couple of earnings that we need to pay attention to. End of the week, we got Apple on Thursday. And we that's the main one we need to look at. Apple and Microsoft, Meta on Wednesday. So the same day we got the Fed release, we got Microsoft and Meta reported after hours. So we'll have probably Wednesday should be a really good day to trade. Like it should be a lot of liquidity, a lot of movement. Then we following up on Thursday with Apple after hours as well. So those are the biggest ones we need to consider.
yeah, and I don't know. I don't know. Apple, them phones are expensive for other Apple people out there. I don't buy Apple. I'm an Android guy, but that Apple got to do a dip pretty soon.
I think everything might need one. Oh, and we
Yeah.
got Tesla too. We got Tesla
Hmm.
Wednesday. We got some other big name service now. We got IBM on Wednesday. Um, so a lot of we got some airlines on Tuesday, UPS. So we got some big names that we need to consider going into the earnings, but especially on Wednesday because we got Tesla, Microsoft, and Meta on Wednesday in
Yeah,
particular.
if all of them do a dip or if they go high, but I'm looking for dips. Look at the indices should be selling because right now the indices are up there. They're overbought.
Yeah, but at the same time, you're gonna have interest rate release, so we don't we can't say what's gonna happen yet. So
Oh yeah, you're right. If they cut on the interest rate, they might just shoot the heck up.
yeah. Um, so let's go ahead and get on the charts. Let's look at the setups for this week. We'll start with dollar. Dollar is already moving from my 0 to 1. The 0 to 1 move, where is looking like we pushed to the downside. We already actually we traded through this daily fair value gap, and we sitting in another one right now. And we just took liquidity. So now that we taking liquidity on dollar, we either get our 1 to 2 move back up to inside of this fair value gap, or we go ahead and push down lower because we got this previous day low from a higher time frame. If we look at this little low right here, and then after that, we got the yearly low. This is the yearly low. So if we don't actually take this out, if we don't actually hold this, we could be looking to push down into the yearly low on from last year, previous year low on dollar. This is last year's low. And if we
It,
can't get a bounce right here, then we could be seeing us take this low out. And if we take that low out, we can look at the weekly.
yeah, if that goes low, that means gold's gonna go higher. It already hit 5,000.
Mm-hmm. We
Oh, and
get
when
that
you
though.
say take the low out, do you mean go lower than the previous year's low?
Yep.
Okay.
Yep. This is the previous year low right here on this candle. And then if we take this low out, we don't have anything stopping it until we get down here. We trading into this order block right here. This red candle. That's been holding us up. If this gets taken out, then we can start looking at taking out this low at 94 right here. But we won't worry about that yet until we see what happened. But a lot of times when I'm looking for my bias, if I see, and this is any candle, this on the weekly chart, but when I see that I have hey, can you turn it down, buddy? Hey, when I see that I have a large candle like this that took out a lot of other candles, my expectation is I shouldn't be looking to really take buys at the moment because I just took out all these candles over here, and this big candle just took out all of that price action. So if I do see a move up, it's just a move to push up and then drop even lower. So, because if this was a 1 minute chart, a 5 minute chart, 15-minute chart, I don't think that there's a circumstance where the probability is at this point, are we going to take out this high or are we going to take out this low? And if you're looking at which one is closer, this low is closer. So working with probabilities, the probability is that I would take this low out before I push up any higher. Okay.
Okay, that makes sense.
All right. Okay. So looking at dollar, as far as dollar goes, and like Hector just said, if dollar goes and push down further, we can be looking at gold. Gold just hit 50K. I mean 5K. I think our last time I checked was a few minutes ago. I think it was at 5,025 on the gold futures. But so if we do push up, right, from where we already took out this previous week low, we could see a 1 to 2 move back up into this retracement, into this fair value gap. And at that point, it's either we're going to trade through that or we're going to sell off from that and we get a 2-3 move to go ahead and take out the low we just made and then likely take out this previous day low right here. We've already started this downside move, so that's what we need to be looking at. We could get a bounce here at the 0 to 1 right here at this 1, and we still kind of sitting at that area. We could get a bounce there, but that bounce, you need to still be looking, how does it respond to 97 73 to 97 44 56, because that's going to kind of tell you if it's going to either push up above this or are we going to sell off from there. Okay, that makes sense.
Yep.
That makes sense. Okay.
Yep.
Yeah.
All right, cool. So let me drop this, and again, like, I don't necessarily use dollar to trade off. And I just want to make that clear. You don't use dollar to trade. You use dollar to read what to do with gold, because gold should be moving the opposite of dollar. Dollar should be moving the opposite of gold. If you see them doing the same thing, it's probably because both of them are trying to get to a certain area of interest. And then one of them is going to reverse at that area interest, and then the other one's going to push through that area interest. That's what you always need to be looking at. And if both of them are, usually if dollar is sideways and let's say gold was already bullish, that actually gives gold the room to do whatever it's going to do, right? And I'll show you a couple of examples of that.
Yeah, you know what? I noticed lately too, when dollar's starting to go up, they're both going up the same direction, but dollar, goes up to a certain point, is ready to shoot in the opposite direction, and then gold just keeps on going up. It's crazy.
Mm-hmm. Yep. That means that they both needed to come to some point of interest, and they just met it at the same time.
Yeah, when I noticed that they're trying to get to their zones where they're gonna sell or buy at.
Yep. And then one is gonna say, hey, this zone getting blown through. The other one's gonna reverse. And so we gapped up on on gold. And we pretty much already met my target on gold. I think we making new all-time highs. So you got to kind of trade it differently as far as your targets go. You got to look at the quarter points. The quarter points are 0, 25, 50, 75, 0. So, and the way you're looking at that, the goal is 5,000, 5,025, 5,050, 5,075, and then 5,100. Those are quarter points on gold. Our main quarter point that I was looking for as the target was right around 50-50 or 50-75 area, which is right here where we got our high. And then another area I like to look at is 50-90, the 90s. I love trading 90s on gold and on S&P 500. So I'm gonna send you guys this gold chart, but this already has met a main target that I wanted to see. So not really gonna probably touch gold too much unless I see a retracement, because I've been waiting on a good retracement off of gold, but it's just been happening outside of the range, outside of my time frame that I trade. So, but my expectation was that either we were going to gap up or we're going to push down into this 4-hour fair value gap and then push up from there. And what it looks like gold's been doing is it's been gapping, stalling, extending, stalling, extending, stalling, extending. So we need to find where we're going to stall at next. And if we get a stall, that'll be the next entry that you can probably look at on gold. But right
Yeah,
now,
gold's been acting weird. Just been doing. It hasn't even been doing like a full retracement. Just doing a little dip and it goes back up. I'm like, what the fuck?
yeah. So yeah, it's been doing exactly that. So it's like and it's been happening during time frames when a lot of us not looking at the charts. Like it's been happening at 8 p.m. over in London session, and in the New York session. It giving you an entry, but it's probably higher than you might want it to be.
Yeah, yeah.
Or
Also been doing moves in agent set session too.
yeah, that's what I was saying. Yeah, so like I said, I'm gonna give you this chart, but I'm probably not gonna mess with gold unless I see the market kind of stalling back and forth at some point. But I just dropped it. I think I just dropped gold. No, I didn't. Let me see. No, I dropped it. I just dropped the wrong chart. Hold on. Let me edit that. I dropped the dollar chart with gold. Let me switch that out. The charts from last week, I meant to go over those. Let me do that on gold too. So if we look at like last week and we see how gold played out last week as compared to what we're looking at now, let's look at that. So on gold last week, on the first, we was 21st, we were looking for that pullback into this zone, right? This got made in the afternoon. Let me show you. This low got made in the afternoon right here. And the expectation was like, since we were already starting to push down a little bit, we sweep that and then push up and make the high. But we never actually pushed back into this range at all. We just kind of just blew through it, took out this high, and we made another high right around this 5,000 area. And then we pushed up further from there without really making a retracement. So that's exactly what I was meaning when I said that. Like we just been expanding, stalling, expanding, no retracement yet. So that's what want y'all to look at for gold this week. This same behavior. Hold on. All right, we'll look at YM next. And look at YM. Then let's compare last week's chart. YM. So Dow, the logic was on Wednesday that we would take the 0 to 1 above this high. Let me get this little drawing tool out. Got my little nephew in the background, so if y'all hear some little random noises, it's him back there. So the logic going into Wednesday was that we take out this high with this 0 to 1 move right here. And then if we hold in this, if we take it out, there's the new week opening gap from this week that will open up. We gapped open this week, last week, and then we would either trade through that and push up higher to take out this liquidity over here. And if we did that, then we should make another high at our 1, or we retrace on a 1 to 2 move inside of this range, this gap range, and then we get a 2-3 move to make another high. And if we made one of these highs, either the 1 or the 3 high, that we should actually get a sell-off around this high. And if we didn't get the sell-off, we would keep going after we make a 3-4 retracement, we will make a 4-5 expansion, right? So what actually ended up happening, and we can look at that on the chart, was we got most of that take place, right? And you can see I didn't even make any changes on this, right? We got our 0 to 1 expansion. We took out all these highs, right? We took out the high we made right here. And then we came down into the range of the new week opening gap. But we end up failing the gap. So that's that. We had our 1-2. We came down. We had our 0 to 1. We came down with a 1-2 to stall inside of here. And then we pushed up one more time right here. And then we sold off. This is actually our 3-4 right here. That's basically what that was. So we got everything to play out on this. It just happened a little. It wasn't as clean as it should have been. So, but if we looking at the charts, like I'm telling y'all to look at them, you would have seen how to take this setup and what to look for the trade. So going into this week, we already opened up this week tonight, right? We opened up at 6 p.m. and we gapped down already. And right now, we pulling back into the gap as we speak. So let me add this gap. Hang on, y'all. Sorry about that. Okay. So we gapped open. It's a small gap, and we pretty much already covered that gap already. We in it right now. This gap right here for the weekly opening right here. And that's gonna be on all of them. Because every one of the indices open up gap down to the downside, right? And the gap, we already trading above it. And now we need to add, the question kind of got to be asked, is this going to be used to keep us pushing higher, or are we just going to reject it? And if you can see right now, we already trading above it. Since we trading above it, the gap opened at 6 p.m. The gap was down to 49,042. And we already traded above it. So now, are we going to continue to trade above this, or are we going to fail back below? And you see, from the close on Friday, we got our 0 to 1 move already started, right? That was the gap the gap down. So we gap down back into this daily fair value gap. And then there's a little 1 hour fair value gap right here. And we kind of holding right in the middle. So is this gonna continue to hold, or does this push up? And then we can look at, if it push up, we can start looking at this 0 to 1 to the upside, where we come back, push up higher, and likely take out one of this high right here from Friday, and then we retrace. And if we gonna retrace, we got to understand we could get a failure at the 1 to 2 or a 3-4 failure. Okay. If we continue to sell, then we should take out this low right here, and then we can look at taking out this low. And if we take out those two lows, then we need to consider a bounce at this 3-4, because that'll be us trading off of the monthly opening price or the yearly opening price. I wouldn't look for nothing to happen until we make this move to try to get a major reversal. Because if we don't do one of those, we just gonna probably continue to range in whatever this same range that we in right now, that we kind of been stuck in for about over a month now. So we've just been stuck in a huge range on all of the indices. It's just been going back and forth. And I think that if we can't take out one of those main highs or lows, that'll be what we end up staying in for the rest of the week until we get our interest rate. Because our interest rate should get us out of there. It should get us out of this range. Okay.
Even big, it's gonna be a major move on Wednesday. That's when the big move's gonna happen, whichever's up or down, which you got the charts come out.
Yeah. That Wednesday with the interest rate plus Meta, Facebook, and Tesla reporting, that should get us out of this range. Got a lot of news to push us out of there. So if you look at this real quick and you look at the broader picture, we've been stuck between this high and this low since December the 5th. And we just been going up and down. And then all we did was tighten up, right? We were stuck between this high and this low, and then we tightened the range. We got stuck between this high and this low, and then we just kind of expanded the high a little bit, expanded the high, then we tightened up a little bit. Then we finally broke on this move down, and we took out that low. But once we set the low, we never took out this low. And then once we set this low, we just pushed up, and now we still just stuck back in the smaller range inside of the bigger range. So that's kind of the same way we trading on all of the pairs right now. All of the indices right now are doing this same thing. So just like we said before on Dow, on NASDAQ, we got the same thing, right? We had a gap last week. I'll get rid of that one. Since we are sitting in it, I'll get rid of that one. And we got the one that we dealing with right now, which is the one from today. Just the gap for today. And basically, price is just sitting in it right now. And we got to ask ourselves the same thing. How are we going to use this gap? Are we going to trade above it? Or are we going to reject it and push back down lower? Because we already made the 0 to 1 move to the downside. We took this liquidity, we took out all these lows that's below this trend line right here. And then we held right here at the monthly and the yearly opening. So a part of what I was projecting for the week has already happened. That low to the downside has already happened. And now that that's already happened, we got to look for the 1 to 2 move, right? We got 0 to 1. Now we need 1 to 2. If we get 1 to 2, that means that we continue to go lower. If we continue to go lower, then we know we got to target the low from Friday. Well, I'm sorry, the low from Wednesday, this little low right here, and then this low right here. Those will be where we target, right? And then this new low we just made will be another area to target as well. So if we get this 2 to 3, if we get our 1, 2, which is this retracement that it's doing right now, and it holds below this, then we can start looking for this 2, 3 move to the downside. If we don't get this stall out inside of this gap, then we need to wait and see how this 0 to 1 move to the upside does. And then we need to be looking at how it responds to this high when it take out this high right here. So for now, it's not touchable right now because we just stuck in this range right now and we sitting inside of the gap that we open up on. And if it's going to stay bearish, then it needs to sell off from here. If it push up above this and start to hold above the high of this at 25,679, if it starts, you start seeing bearish candles close above that, then you need to start considering that this gap might not be pushing us back now, and it might actually be looking at as support now, right? And if we do get another push below this low, which is now are going to be our first short-term target to the downside, that means we made a 2-3 move to the downside. And then if we get a 2-3 move to the downside, that means that we got to deal with this order block and this fair value gap that's right here. And we could see a bounce at this 3-4 move from here, because that could push us up higher at this level. And if we do get, I'm not going to annotate it, but just know that this is an area we could see a bounce from. And if we do see the bounce from here, if you don't get in at this 3-4, then you can look for a price to push above this gap. And then you can start looking at this gap to hold as support as well from that point of view. But if we start failing, then you'll notice that we get the 4 or 5 retracement. And then you target below this low and this low. And just like we said before, last Wednesday, on Wednesday, we had price push up above this high. We had price play around in this gap. It made another high right here. It stalled out and it started gaining support near the low of the gap, which is right around here. And then it pushed up and made another high, right? So we're going to be looking for the same things, right? And if we start to see this gap get traded through, then we can start looking at this 0 to 1 to the upside, where we take out this high. There's another high liquidity right there. That's where they're going to be looking to draw to. And right here and right here. And then this is the previous month high. And there's equal highs right here from previous month above, right? Your 1-2 retracement is probably going to be not going to push all the way down to the gap. It's probably going to hold and use this as an order block right here. And we won't see price trade this 1-2 move below that if it does come back. If we get higher, it's going to use this same area right here, this little order block right here. It's one that's this is a bearish order block, but what they'll probably do is use this to buy from this area. That's why we would get a 2-3 swing high and then a 3-4 retracement. The 3-4 retracement should be us holding up above these levels right here. And then eventually will get us to take out this previous month high and these equal highs. The last thing is we could get a retracement, a sell-off at the 1 or the 3. And that would definitely be something that's possible, but that one, if we already got a lot of momentum to the upside, I would not be taking that with a lot of size on that, right? I think that would need to be taken with a smaller size, because if we start to take out those highs, that means that the bias is to the upside, and it's going to be only probably short moves to the downside that you're going to get. And anytime you see a move to the downside, it's probably just a move to the downside just to buy it up. Okay? That makes sense?
Yeah.
Oh
Okay.
yeah, made perfect sense, brother.
Okay. Here is the last pair. This NAS. That was NAS. And so this is ES. Same look. I like ES a little more. Of course, that's my favorite pair to trade. We inside of the range the same way. You can see we already gapped down just like we did on the rest of them. And let me add this gap. Already gapped down. And we've already made the first 0 to 1 move for this to the downside. And that 0 to 1 move pushed into the order block and the fair value gap from the 1 hour. Okay. So the order block I'm referring to is this down candle right here. The fair value gap I'm referring to is this one right here, where you got the low right on this candle, the high on this candle. And when we gap down, we took out all of these lows right here, and we traded down from where we closed Friday. We put the low inside of this fair value gap in order block for the 0 to 1. And then once we traded into that, we bounced off of that. And now we push back into the gap. So that's this everything that I'm talking about right here. And now we back in the gap. The question is, do we hold it or do we continue to sell off? We had a bearish gap to the downside. The bias should be bearish until proven otherwise. And if we prove otherwise, then we look for the 0 to 1 to the upside. And then we start looking for price to take out these highs right here. And then that'll be the setup for the buy. But if this fails, you can consider this move that it's doing right now as the 0 to 1 move to retrace, right? And then you should start looking for how we react around 69.34, which is the high of this gap. And then you can see we even might get some overlap in the gap from last week at 69.41, 69.58, and 69.76. Might get a little overlap. So this 0 to 1 push down, but this could give us a higher retracement. And we could get into this gap too, and that's okay. So we need to look for how we respond once we get into these two gaps. And if we do get a rejection in there, that could be our 2-3 setup. And then our 2-3 setup, our first target will be this low that we just made, and then it'll be this low, and then it'll be this low. This the monthly low for now. We could get another bounce once we get into if we do make the 2-3, the 2-3 could be a bounce to set up the 3-4, which should happen around this low right here. Inside of this fair value gap that is already traded from. Right here, this is a fair value gap. This is the order block that you want it to trade down into. So that's what we'll look for, right? Not gonna add the bounce here, right? But just know there's a potential for a bounce at 3-4. If we stay bullish and we start to see price hold above this gap and inside of this gap, that means that we got the chance for this 0 to 1 to the upside. The 0 to 1 to the upside should start holding at or above 69.41, and in between 69.58. We should see price push through that range, right? And then take out this high, these highs right here. And then we should get a high around this 7,000 high, 7,000 price point. And then if we get this high, we should also see a 1-2 retracement. And then we should start using last week gap to push us higher. And if we get last week gap to push us higher, that should be our 2-3 to push us above all of these highs over here. We may get a retracement at those after we take those highs just below the all-time high. So if we do get up here and take these highs, just know we could get a retracement around there. We got some bearish order blocks up here on some smaller ones that could set us up for a 3-4 sell-off. But if we don't, that 3-4 sell-off don't really start taking out lows, we can look at that as the 4-5 retracement to take out the all-time high. The other thing to mention about these all-time highs we are at with we're near all-time highs right now. The closest one to taking out an all-time high is Dow. So if you see Dow take out the all-time high, Dow should trigger the rest of them to take out their all-time high. So it'll be in this order. You'll see Dow take the all-time high first. You should see ES take out the all-time high next. And then you should see NASDAQ take out the all-time high, because Dow is closest to doing it right now. Okay? That makes sense?
Yeah.
Okay. All right. So all of the pairs I just went over, and then the rest of the session, I'm just gonna open that up for Q&A. You guys can just turn on your mics, ask any questions you want, anything you want me to look at.
Yeah, Corey, everything seemed like it been spot on, man. I've been looking at your videos and stuff. It's been helping me out on the paper trading.
Okay, okay.
So I think I'm ready. I'm
Don't
gonna
rush.
talk to you a little more. I ain't gonna rush you, but
Don't rush it.
everything been spot on.
You ain't gotta rush. This money gonna always be there.
Oh yeah, and I heard you talking about you thinking about going to Thailand. You know, my daughter going back over there in April. You know, she looking for a teaching job over there right now.
They easy to get.
Yeah, I know. I do it.
They easy to
So
get.
she thinking that she talking about us going over there for a couple of years too, bro.
Yeah, I might be on the way back.
Yeah. Oh yeah.
Okay. All right. All right. So I guess no questions, and I will I'll make a couple edits and then I'll post this in the group. And if no more questions, everybody have a good night. Have a good week.
I have, I have one thing
Okay.
about Neo.
Neo.
Yeah,
I'm
are you
I'm
still
gonna
in?
close that. Yeah, I'm still in there. I'm gonna let
Okay.
that one close out.
Okay.
Yeah, Neo is
So your expiry was also in Feb, right?
let me look at my phone. Yeah, I'm gonna have to take the loss on that one.
Yeah, me too. I think I have to.
I only think I got I think I got hold on. Neo. I only got one contract left.
Okay.
So I took most of my money off of that. So I got one contract it expires in May. This one expires in May. I was trying to see if I can salvage it a little bit, but I think I'm gonna just take the L on that one.
In May one, 5/15 one.
Yep.
Okay.
Yep. Yep. That
And
one. Let me bring up the chart on that one.
yeah.
Give me 1 second. It's been stalling.
Yeah, I don't see any movement there also. So I was also thinking because I have one for 220, Feb 22. So
Yeah.
I'm thinking to get rid of that.
I think that I don't want to talk about politics, but his policies are not they stalling the market. I
Mm-hmm.
hate to say it. Like
I
a
was just
lot of
about to
the
say that they stall it and then they push it up.
yeah, a lot of the companies that's why I ain't been really trading options a lot lately
Mm-hmm.
because it's been stalling out on a lot of the individual companies. Like, I mean, you can pick up some trades on like Nvidia and Tesla and stuff like that, but I'd rather just spend that time on the indices versus to look for options, you know. But like because I like to swing trade my options, I'm looking for plays that I think got some momentum to the upside for the most part, and or earnings that's going to report good earnings. But we just it's just been a push to the downside and just been stalling on this. So this one gonna have to take a loss on this, but because the last time I looked at it, I was hoping we would get a bounce from here.
Yeah, same here also. Like when it was here, so I thought it will bounce from C, but it
Yeah,
didn't. So
yeah. So we did
Which
get the
which
bounce.
which company is that, Corey? What
It's a automotive company. It's
Oh, okay.
Neo. Um, Neo's like I think it's a Chinese automotive company.
Gotcha.
Another company that I wanted us to look at too, but again, a lot of these haven't been getting a lot of movement is BYD. It's another is it this one? I think it's this one. I gotta find a symbol on that one, but I gotta do a little more research on it. This might be my next earning play right here. I just gotta let me look and see if this one. So if y'all want to kind of get a heads up, um, this is one I want y'all to kind of look at too. They report earnings here in a couple weeks. And the reason why I'm looking at them is because when I'm looking at earnings plays, I like to see a couple weeks ahead of the earnings release for the market to be going down, right? And then while it's going down, I like to see it coming to some area of interest, right? We got fair value gap right here. We got a gap right here. We got another fair value gap right here. So basically, with this, it's what I'm expecting, what I'm hoping for on this is that for it to look like this, right? from this high, we make this low somewhere inside of here, right? And then maybe we get a bounce, right? And then maybe that bounce fell, right? But then once we push down below this, I want us to see us in this gap right here or in this fair value gap that's right here. And then once we come into that, I'm wanting to see us bounce off of this right around the time we report earnings and then push up and start taking out to go higher. That's how I like to catch my earning plays. And you can see kind of the same thing. So the last earnings release was here, right? And if I was looking for the same situation, right? This is the high right here. We were waiting for the high to get made, right? The high is right ahead of earnings, right? And then right before, a couple weeks before earnings, right? We took a little dip. We right after the earnings, we pushed up and then we sold off. But then right after the earnings got released, if we look to the left, right? We look to the left and we make this sell-off right here, right? We took out these liquidity zones right here, this low. We came basically to this gap right here. You can see where that 76.33 is. It's pretty much right inside of this gap. And then what we do, we push up. We came back and retraced, but by the time we come back, we already made 100% on just this move right here. We already gained 100% on this.
Oh, I see where you're getting at. So you're looking at for it to sell to that 79.41 and go up from there.
Yeah, if I was to try to look at this setup from this earnings on October, from October earnings, right? If the way I'm looking at this is going to be the same way, right? So I want to see us make a low going into earnings, and then I want to see us retrace. Like I want to see us. We already making our 0 to 1 to the downside right now, right? So now I want to see a 1-2 to push up to try to act like it's gonna do, continue to the downside or continue to the upside. Now I want that to fail. And then once the earnings come out and we confirm, all right, we beat earnings, we beat the estimate of 1.934, we beat the revenue of 1.02 billion, and we got good guidance. That's the other thing. So that's when you trade in options, you want to have those three things in line with a technical pattern, right? My technical pattern is I want to see liquidity swept. I want to see us come to a fair value gap or gap. And then I want to see us hold. And then right before or right when or right just after the earnings release, I want to see the earnings get beat. I want to see us beat the estimate. I want to see us beat the revenue. And I need to hear them give good guidance for the next quarter. That's the formula right there. It's that
Now,
simple option.
now that gaming company that you're following, do you know which games that they're?
I don't care. Yeah, I don't care. I just want to see them meet those requirements.
No, I should. I just want to know if the games, my sons and all that play. They're playing games. And
Yeah,
then oh, then I fucking ask them opinion. Are they buying the shit out of it or what? You know what I'm saying?
I don't care. I don't care about all that. I just want to know what is the data telling me. Because I'm not looking to invest in the company. I just want to trade it. And usually, I just want to see the companies that have higher potential to beat their earnings. That's all I care about. Because if I'm going to learn long-term invest, that's a different situation. Then I want to know all that information. I want to know who's invested. I want to know who are the institutional investors. I want to know the market cap. I want to know how much debt they got. How are they in net profit? Or are they is the company in profit or are they underwater? Like that's when I'm looking at that kind of stuff.
How long?
And
How long you been following this company here?
I don't care. Like
No, I'm saying
when I'm
how
picking option
saying
plays,
as of right now.
yeah, when I'm picking
How long
option
you been
plays,
watching this company?
that's what I'm about to say. When I'm picking option plays, I'm looking for companies that's beat down before earnings. That's what
Oh.
I'm looking for. Companies that's beat down before earnings and they have a high probability of beating their earnings, which if we look back at, we can look at the data. We beat the last quarter. We beat the last quarter. We beat the last quarter on this same company. We beat the quarter before that. We beat the quarter for that. We beat the quarter for that. The last time they missed on earnings was in May of 2024, April of 2024.
Yeah, I noticed they've been selling, but then they've been going up past their past ones that they've been selling at. So yeah, they're going good.
Yeah. And what I'll typically end up doing is if I see and I like the company and they meeting all my requirements, I'm gonna buy leaps on those companies. And leaps are just long-term option calls. And I'll buy the leaps on them, and then once I'm up 100, 200%, then it's on me. Like, hey, do I want to take some money or do I want to just let it ride, And if I like it, I'll take some off, and then, that's at 100% or 200% or 300%, however much I'm up. And then I'll leave some in to see if I can, double or triple that some kind of way. And then if I can't, I'll just take the loss on that. That's what happened with Neo. I think I had like 4 calls on there, and 3 of them I closed out at 100%. And then I got one that I wanted to see if it was gonna push up higher that I still had left by the time the May 15th date expired, and then it just never manifested. But
And which broker you using for these options and stuff?
Robinhood and Interactive Broker.
Okay, Robinhood and broker.
Yeah. And you can easily just set it up on your phone for Robinhood and Interactive Broker. I like, and I'll be honest, I actually like the platform for Robinhood better than Interactive Broker. But I mean, they're both a good platform, but I just like Robinhood better because it's easier to use.
Now, do you get interest if you like if you send me a link like the way the other brokers are? Or no?
You mean the referral bonus or something?
Yeah. Because to be honest, I'm still using MT4 and 5. I haven't went to any. I got my old company. They're the only company that didn't close down. That they're still on MT4 and 5. I haven't been using all these options and
Really?
yeah. So I'm kind of like new. I still because I tried to go with Kim one time, but they were jumping on different ones, and then one month they weren't. Liking going to another one. I got tired. I went back to my old. I still got one broker. They're still trading on MT4 and 5. I just still. I'm like, you know what? Screw this.
Yeah, I switched off of the Forex brokers last year, and now I'm just trading futures, and I'm trading prop firms mostly, and my I'm doing prop firms, and I'm doing those with my Apex and Top Step accounts. I'm doing options and some live trading in my Interactive Broker account. And then I'm doing options in my Interactive Broker and Robinhood account. I don't have any more Forex / CFD brokers
How are they
anymore.
different from the Forex one? That's why I want to know. I still never got.
Just it's essentially the same. the only big difference is a lot of them you can trade from TradingView. So if you look at this, you can trade. Oh yeah, I forgot about the AMP broker. I don't even have nothing in that account no more, but because I moved it all over to Interactive Broker. But this is another good company, Interactive Brokers. You can open up a TradeAvate account. You can even trade your Coinbase on here too. I don't do it. I've done it before. But you can trade Coinbase on here. Another one is Awanda. Awanda is a good forex broker still that you can trade on here too.
I actually anything on trading view on my indices, gold and oil and all that. I watched the on the chart, so I should go
Yeah.
try.
Yeah. And then Ninja Trader is good too, but I don't actually have an account with them. I just know that people use that one. So
Now you said Robinhood. Does Robinhood
yep.
attach to you could use trading view connect to trading view or no?
No, you can't trade it in TradingView. But
Okay,
like I only
Interactive.
use that for options. My Robinhood account, I use that for options and actually buying stocks. And Interactive Broker, options, futures, and buying stocks. So no more MT5 at all. Like I don't even know who's still using MT5 at this point.
Me.
MT5. I mean, yeah, you the only person I know.
And for because you know what I say to the same trades, indices, gold, oil, shit like that, and I do some of the full forest pairs if I see them moving. The
Yeah,
dollar goes strong. You know me, I watch the dollar strong when it gets weaker, higher, and it pushes a lot of the forest pairs, and I just jump on them.
yeah. I moved all that to futures. So that's the only difference. It's the same thing, just different assets. So
And you know what? The only reason I didn't move because all the other brokers I had they closed down when United States wasn't letting them do, but only one of them stood open. I'm like, you know, fuck it, I'm gonna stay with it until they shut down and never did.
yeah, yeah. What broker is that?
Coinex.
I ain't even ever heard of that before. Yeah. Okay, okay. I'll send y'all this too, BYD, if you want to just study it. But I'm waiting for earnings, and then if it pops, if it does what I want it to do, then I will be taking call on that, buying calls on that. I don't know yet. Let's look. Let's just look. I don't know what options contract I'm gonna be looking at yet. Let's see what contract.
Or what's the VIX symbol?
I'll show you.
Okay.
Oh, I didn't give y'all VIX chart. I'll give you that right quick. So the contract on Boyd that I would be looking for. Now I'll have to confirm this on my broker because it's usually a slightly different, but the strike price is 83.89. Right now, let's see. The bid and the ask. Let's look out. Let's see what the September contract costs. So we're looking at 300. So if we do push up, not saying we take the all-time high, but let's just say we take out 86. Take out 86. So I guess 90. No, 92. I don't want that. Dang, that's a little expensive, a little more than I want to pay. Let's see what the June is. You might just go March. So March, probably look at the March 90 or 87. That'll be $200 for this. The 85 is got a lot of volume on it. That'll be 300 on that. So I'll be risking either $200 or $300 on this trade. If I get a 2-to-1, that'll be a $600 profit. If I get a 1-to-1, that'll be a $300 profit. A 100% return on that, that'll be $300 profit. If I make 200% on that, which 200% would be 100% if we got in around here, which is where I'm expecting us to do, that contract should decrease. So we should be able to get it around maybe, if we look at the $85 contract right here, by the time earnings come out, this 310 should drop down to like 275 to 250. So should get the contract around 275, $250, right? If we come all the way down here around this 3. If we do that, then again, we should be able to get it around 280 to 250. And then 100% gain should be, get it here, 100% gain should be, if we make 83 cent, 83.20, that's 100% gain. If we make 84, that should be a 200% gain. So by the time we make, if we get in around there and around the $82 price point, and we can get up to the 84 price point, that should be a 2-to-1 right there. So that should be roughly around $500 profit, $600 profit on that. If we take that one. Then after that, it's kind of however you want to trade it. If you want to hold one, see what happened. And because eventually I want to see us take out this high up here at 90. This $90 high.
So I
And
think I
that'll,
missed the part. So you are looking for March 20, right? This year,
I think so.
26,
Yep.
right? Uh-huh.
Yep. I'm thinking March. Because this earnings release should be in February.
Yeah, 5th.
Yeah, February. So I want to see us push down near this 3, which is right at this gap. And then if we can get down near this gap, that's when I'm gonna start looking to buy it.
Got you.
How about the calls on this for the March 20th contract? And I'm expecting that $85 contract to get pushed down out of the money. Oh, I'm sorry, above the money. And then that 82 should run up around the strike price. So right now you see we at 83 on the strike, 83.89. I'm expecting this 82 or 80 to move above the money, and then we can go ahead and look to buy that one
Got you.
at around 280 to 275 for one contract. And then I'll probably do 1 or 2, 3 or 4, at the most 4 contracts on that. That's the only option play I'm looking at right now. I could be looking at more, but I'm focused on dialing in on these prop accounts right now. So I'm just gonna finish those first, and then I'll be looking for what's next on the option plays.
Quick question, Corey. How do you focus on which stocks? Like, just out of curiosity, like, do you focus on stuff you like willing to buy for the long haul, or do you just look for like certain strategies or something? I don't know. I was just curious of how you look for which stocks to do
Yeah,
trading
I
on.
mentioned it before. Like I will like be going through and looking for stocks that's reported good earnings for like a certain amount of times in a row, right? And then I want to see them because I only do longs on options. I want to see that they made a high and they selling off on the high going into their next earnings release. And then I want to see that there is some area of structure like we got right here. We got a gap and we got the fair value gap that it could be coming into at the same time that the earnings could be releasing. So on this particular day, if I see that we coming into an area that's bullish that lines up with the earnings at the same time, that's something I'm gonna look at. And either I got a whole little watch list, right? That I'm looking at all the time. Some of them some things I trade multiple. I've traded like in and out of these, but like I got a little list of them that I'll be looking through. Like on my list is always Nvidia, Tesla. I don't really mess with Tesla like that, but like Irene, Mara, Riot, sometimes Snap, Neo, Sound, SoFi.
Yeah, I got so far.
Yeah, I just got a couple of like 30 of them that I'm looking at in and out.
You looking at Netflix?
I need to. I need to. I
Okay.
don't look at it as much as I do, but like, and then like Hims, that's another one I made some money on. Um, just all over, like, I usually will go through this list and see which one of them look the best.
Okay, so you have like your set few that you look at. I thought maybe you
Yeah,
might get a list from
yeah.
someone or something.
Every now and then, my buddy, I'll dial in on one that he looking at, and we'll trade it together. But this mainly the ones I'm looking at.
Got
And
it.
then also, if there's like something geopolitical going on, where like, oh, I might need to look at gold stocks or something like that, I'll be looking for the same thing with gold stocks.
Okay.
The stocks that I own, like the main stocks that I own that I'm like just holding and stuff like that, that's those I don't trade options on, but I'll just buy those. Now, and in those, I'm looking at different stuff. I'm really like, if I like the stock, I'm really just looking at when do I see a dip buying opportunity. And when like I like Nvidia, I think that's gonna be a good one. So right now, Nvidia is hovering between 175 and 200, right? So all right, cool. I'm gonna buy some Nvidia. It's at a good level, right?
Yep.
I like Amazon. And when I see Amazon dip, uh, and I hear it selling off pretty hard, I hear bad news. I'm like, okay, is doing bad today? All right, cool. I'm gonna just go buy a little Amazon, and because I think that that's gonna be a staple company, right? So when I know that I believe that the company is going to be good and it's going to be one that's going to be around, I just go out and anytime I hear bad news, I buy. I don't put a lot of thought into it. I use that as just this where my extra money is going to go. I like that. I like Delta. I like SMCI. I like GDX, it's gold company. I like the Jet Index. That's a index for all airplane related stuff. Like, so those are just some that I just like those. And like, just like people say, like, when you buying stocks, the first thing you do is buy the stuff you like and buy the stuff you believe in, right? That's the first thing. The companies you believe in, the companies that you think gonna be around, just go start buying those first to build your initial portfolio. Then after that, you can go add all the complex work in later after you got a strong little strategy that you want to use. Then after you got that part, then you start looking for what can I swing trade. You find your swing trades. That's where your options come into play. I prefer to swing trade on options where I can hold it a couple weeks, a couple months, a year, and then I know by that time frame I should make the money I'm expecting to make. Then on the regular basis, I'm looking at my futures for my scalping and my day trading because I can make the money that I want to make on my live and my prop accounts in my day trading account. And then I can take that money and reverse engineer. Now that money that I just made from props and live accounts, that's going into my options account. Then I'm gonna swing that money. I'm gonna make the money off of that. Then I'm gonna take that money that I made off of that, and then I'm gonna go buy stocks with that. You see what I'm saying? It's like it's a cycle, you know? It's a cycle to move your money and always have it working for you.
Yeah, that's the habit I've been trying to get into. Like every money that I make and earn, I just been trying to reinvest it back into stocks. Stuff I like.
Put it in some options first. So that money, like the way you look at it, right? That money that you about to buy stocks with, you can initially flip that quicker with the options. Then you take that part of that money and go into buying the stocks because so you can just let that sit.
Gotcha.
Yeah,
Yeah, I like that.
yeah. That's why when people ask me what kind of trader you are, I'm all kind of trader. I want all the kind of money. I want the short term, medium term, and the long term money.
No holding back, huh?
None. So
So with those setups that you sent us, how can I like use that to like paper trade this week?
good question. So the first thing you're gonna do is you're going to open up a TradingView account if you don't have one already.
Okay.
If you got the TradingView account and you click on this open panel, there's a little paper trading simulator right here. You can use that to start paper trading, to learn how to use the platform, to learn how to set up your indicators, set up your drawing tools and stuff like that. All this little stuff you're seeing on the chart is not an indicator, this is just my projection, right? Then let me open up my paper trading, right? So this is my paper trading account, right? And once you establish like, hey, I want to paper trade some futures, right? We are going to look for the current contract. I think I talked about this in that video. So I'm not going to go into the video that I sent you guys who were on the call with me after on Wednesday night. We did like a little basic session, right? You look for the current contract on whatever you want to trade. The current contract we in right now on the ES is Let's say you want to trade ES, the current contract is we in the March contract. You're gonna look for MES H 2026. That means that you're gonna trade the mini E-mini, the micro E-mini S&P 500. If you want to look for the NASDAQ, it'll be in QH. That's the current NASDAQ. You're looking for Dow, it's gonna be that Dow Jones is YM. If you're looking at gold, it's gonna be GC or MGC for the micro, and it's gonna be MGCG 2026. And at that point, you can buy, sell, and all that other good stuff. I'll put a trade in right now. So right now, the market pushing up. I'm not actually picking no direction, but you can just buy from here, or you can right click on the screen and then look for buy, sell right here, or you can add an order. This will give you the means to put in a stop loss, right? And then you can drag it. I'm gonna put my stop loss. That means this is where I'm willing to lose. I'm gonna put my TP. I want it to close out here. And then once I'm ready, let's say I want to add another one, I can just click over here. Let's say I want to add, I'm gonna add 10. I'm gonna risk $2,000 on this trade. My stop loss in and my take profit in. And then I'm just gonna click buy. So if the market comes down, it should pull me in right here. And then once I get pulled in, I'm gonna be looking for price to go up here.
Okay.
If you want to adjust this, you can just drag it. I don't want to risk 2,000. I only want to risk whatever this is. That is enough for me to risk. I just adjusted it. If I want to take some profit off, this is a buy order. These two are sell orders right here. So this is a sell order for 10. I'm gonna put a new sell order in between this as a take profit. Put a new sell order right here. And that's gonna be a partial. That means that I'm only gonna take however many contracts I put on this. Let's say I'm gonna take off 8. And if I take off 8, that means that by the time this takes off, I only have 2 contracts left. And I'll need to adjust this from 10 to 2. Okay?
Okay. I got that.
Cool beans.
Thank you.
Cool beans. Any more questions, or is that it?
I'm good.
You never showed her the VIX score.
Oh, see, y'all checking me.
Yeah, I sent you a message too.
You sent me a message. Okay. The VIX. So on the VIX, I'm looking at us to either bounce or take out this low these two lows on VIX, right? Because right now we sold off. We pushed up. We sold off after we made this high. This was the weekly high for last week. And then we just sold off through this gap. So the gap we gapped up last week, and then we ate up that whole gap. And so now, with us being at this low, are we gonna bounce off of this area? Because we got equal lows right here, and we basically set in two additional lows. Are we gonna hold these lows down here, or are we gonna trade down to this monthly opening, yearly opening price, and sweep this low, and then sweep these lows? And if we sweep these lows, then we risk coming down to this previous yearly low, or this one right here, which is right around 12.0. So that's the main thing I'm trying to answer on VIX, right? And we'll get we need to figure out whether we get the zero to the push to the upside or the push to the downside. Right now, probability is actually saying we push up to the upside. And of course, if we push up to the upside on VIX, we should be selling on the indices, right? So if we do see the push to the upside and we get a 0 to 1 move above this little short-term high right here, then we should come to this 1688 price point. We come to this 1688 price point, we either gonna reject here, which I don't have on here, but y'all need y'all to remember this. It should reject right here, or we should hold above 1688 to go ahead and make this 1790 price point. If we do, we push up higher into this. This is an order block now right here. This blue candle is an order block. If we come into that, then that's when we should start looking for rejections around 1790 to like 1850 area. If we sell off, then the first thing we need to do is consider that these lows are going to be our target. And then this monthly previous week low. And then once we take these lows out, we probably could get a bounce right there. And that'll be after we make this 0 to 1 to the downside. We could see a bounce right around this 1-2 move or the 3-4 move, depending on how it play out. But if we do that and we can't get back above this yearly opening, monthly opening, then we'll probably sell off around this 2-3 or the 4-5 to go ahead and start taking out these lows. If we do see the downside move, that's the momentum we need for indices to buy. So if we start seeing that, then we know that indices should be buying up from here. If we see the down move on VIX, look for indices to buy. If we see the up move on VIX, look for indices to sell. That makes sense?
Yeah, I got you, boss.
Okay.
Mm-hmm.
And if we see VIX push down, but hold around those previous week lows, then what you'll see is a change in pattern, right? If we see VIX pushing down, that means that indices pushing up, and then we should get a high or a higher high while VIX is making a lower low. And then if VIX continues, or if we get the reversal from there, then you'll see a retracement on the indices as well. So what that'll be is if we start pushing down and we push down, we make moves through these lows, and then we start to see a lower low around here, and then we push up, that should be the retracement on indices as well. That'll be a retracement to the downside while this is pushing up. Then cars, you asked about Russell 2000. The Russell, the futures for Russell is not one. I don't really trade Russell.
The US 2000.
Yeah, Russell 2000. Hold on. Give me 1 second. Okay. The futures for Russell. Is I don't know if they got the mini RTY. Let me see if they got micro. No micros. So only minis. And then we'll just add that symbol to my list. Let me double check. Does this have a micro symbol? MRT. No. Okay. So they don't have that one, but let me go back RTY and get the current contract. Current contract should be this one. Let me get rid of you. That's the continuous contract. Okay. So looking at the Russell, since I never marked this chart up before, this is a good thing to look at. This is my thought process when I'm marking up a new chart, right? And this is what I mean when I'm saying like I kind of want to get like the direction, right? So this is the last low we made. We took out a high, and then we've been making higher highs ever since, right? Then the other thing, that's overall direction. We bullish, right? But then now you get into like what's actually going on of late, right? We made a high here. We took out the low of that candle. We made a lower high here. We made a higher low here in this candle on the lower time frame, right? So that means that we are bearish on the lower time frame, bullish on the higher time frame, right? And when we made this bearish candle, this candle took out one low, it failed to take out another low, right? And this on the daily time frame. Let's just check the weekly too. The weekly, right? On the weekly, we took out this high, but we didn't take out this low. We still kind of bullish on the weekly, right? We still bullish on the weekly, but we are at an indecision point because we took out this low. I mean, took out this high. And then once we took out the high, we made a new high. But after we made that new high, price traded back in between the previous week candle, right? And even this candle right here that we just closed on, it gapped down on this new week that we in right now, and it didn't take out the low. So that's still bullish momentum, right? Even though we not making big expansive candles, we still holding inside of the range. So that's like a 50-50 setup. Like we could continue to push up, and that's how you gotta lean towards, is that we have more potential to push up to the buy side, right? But we are actually sideways overall going into the recent past couple of weeks. And if you look at the lower time frames, you get that confirmation, right? We've been ranging. Then we broke out, we set the low and the high right here for a small range. Then we set the low right here, and then we broke out. And now we push right back into the range that we just came out of, right? So the question is, do we hold this range? Do we take out this low? Or do we start coming for this high? Right now, we can't really say with clarity that we take out this high. We got to assume we probably stay in this range. And if we're going to stay in this range, you got to look at price a little different, right? So what inside of this range is going to be the things that would make me go higher, and what are the things that would make me go lower? The low we just made is the first thing. The low that's here is the next thing, because that's the closest thing I'm to. I'm closest to this low. So since I'm closest to this low, and we did just push all the way down here, this is the first area I want to look at. Right? That's the first area. I want to see how we handle being down near this low first. Then the next thing is, if we don't take out this low and we start to push up, what is something that could make me sell, right? I can see that I got a fair value gap, two of them, one up here and then one right here. This is the closest one. This is the closest one. This is a bearish fair value gap, right? So if price comes up, the price is going to push up from this low. The first major area it's got to deal with is this area right here. And then you need to be asking yourself is, right? Make this a little bigger. You need to be asking yourself, once we get into this range, are we going to fail this area? And then if we fail this area, hold on. The high on this is 88.6. Okay, so this is where I begin my projection from, right? So now that I'm seeing like, hey, we got the potential to push up higher, right? And based off of the last close, if we go higher, how do we deal with this range right here? If we're gonna get into this range, once we get into this range, if we can't go higher than this, we should get price to sell off in this area. And if it does sell off, we should be looking for price to take out the last low we made, which is right here. And then the next one is here, right? So if we do sell off, right, we should be seeing price push down. But this move to the upside will have a lower time frame fair value gap in there too. So we could see something that looked like this that's pushing us up higher. So you have to look at that from the standpoint that we could hold inside of this range and push up higher, because we might not use this to sell. We might use this area to buy. So if we do use this area to buy, you're going to start seeing price hold inside of this range between 26.88 to 26.98. right? So you might see lower time frame prices hold inside of here. And if you do, then you got to assume that price is going to trade above whatever high that we made in here. And then it's going to trade to the next area that we could be looking to sell from, which is there's a fair value gap right here. I'm not going to draw it, but there is one right here. So that's the next area you can look for price to react to. So that's why you got a 2-3 to here. Then once you get in that area, there's going to be a range of price in between these two ranges, which because we got a fair value gap. So once we get up there, then you're going to say, hey, if we get up there, do we continue to take out this high? Because that's where it's going to go. Or do we reject at the 2-3 and we get a 3-4 retracement, right? And if we get a 3-4 retracement, that should come back into this range or at least to the high of the range. And then we should either continue to sell, where then again we start looking at these lows, or we hold it and we get a 4-5 from here, where then we start to go retrace and push up higher. So that's what I'm looking at. That's why I'm looking at those different projections, and that's what I'm doing. And then once I get to one of these levels, right, I'm looking at my setups once I get to these levels to see like, hey, am I gonna buy right here or I'm gonna sell right here? Because if I'm right here and I already seen we did the 3-4, if we come down here and I'm seeing that we holding in this area, then where I would have sold from the 3, I'm going to be looking for the buy at the 4, right? So I'm going to buy this move up higher. And then I'm going to target the 3, and then I'm going to target this high that's at the 5. If we looking for a sell, and like we already would have done at this point from the Friday's close, we got a 0-1. What's the first thing you got to deal with? You got to deal with this order block. So my 0-1 going to come down to, the order block, right? Then I'm going to be looking for price to retrace somewhere between the 0-1. The main thing, like, we don't know that this is going to gap down, so we don't know we got a gap. But if we don't know that, right, we still got this candle right here. This was a bullish order block. And now that it's not bullish, that same little area of structure, I can use that to see that, hey, if I don't get the push up from there, then that should be where I should get a sell, right? Because this is somewhere that bought. Now it's going to be somewhere that sold, that can sell, right? And because of that, I'm looking for my 0-1, then I'm looking for my 1-2 to retrace to around that area. Then now that 2-3 move should take out whatever low that I made in the 0-1, and then it should take out the last low over here if I make the 2-3. And then basically you're looking for where could it be going, right? Below this low right here, there's liquidity all the way over here, these lows right here. And there's a small fair value gap. And there's another fair value gap right here. And there's an order block right here. So your 3 is going to come likely somewhere around there, right? And then depending on how they want to use the market after that, this 3-4 move that we haven't drawn up could be the push to take us higher. Or inside of this 2-3 move, there's going to be a new fair value gap and something else around this area between this right here. You're going to get a fair value gap right there. and that should give you your 4. And then your 4 should take out this low and any of the low that is associated with this, and then we should trade further down into either to this area over here where we come near this low to take it out, or we just trade and hold inside of these 2 fair value gaps. Knowing that, hey, if I make any of this, if I do any of this move, right? Hold on. Okay. So knowing that if I make the 0 to 1, the 1 to 2 could retracement could be a move higher as well. If I make the 2-3 move to the downside after I take liquidity, the 3-4 could be a move higher as well. Same thing with the buy it, right? If I make the 0-1 move up here, the 1-2 could be a move to the downside to take liquidity, right? If I make the 2-3 move to the upside, I take liquidity from the high that we made over here, knowing that after I take liquidity, I could sell off on the 3-4 to the downside. Okay.
Mm-hmm.
So that's where I'm getting all that from. And that's how I look at my markups when I'm marking up my chart. And I'll send you this, Russell. I don't trade Russell. Why did you even ask me to look at Russell?
Because I've been looking at it for a little while. You know, I had it marked up a couple of months ago. Just never
Okay.
came back to it. I just happened to look at it a few days ago.
Okay. Okay.
Yeah. So why don't you trade Russell though?
Because it's like a stepbrother to S&P and NASDAQ. And S&P and NASDAQ and Dow Jones, they move the market more than anything. So I don't necessarily trade it because I got 3 other pairs that I could trade before I trade that. Or really 4, because I would rather trade gold before I trade Russell.
I think one reason why I was looking at it was I had been looking at small cap stocks to kind of trade a little bit.
Mm-hmm.
So whenever it's it's time for me to jump into the market, that's an option to look into.
Yeah. I rather just trade the main things I trade: S&P first, NASDAQ second. It's a toss up between Dow and gold, and that's it. That's it.
Yeah, this lady I used to work with, she been trying to get me to trade S&P 500 for like 20 years now.
Trade the futures on it.
Futures on it.
Yeah. Yep. But on that note, my mouth dry, and I will see y'all on Wednesday. And I'll post the video after I make a couple edits to this, and then we'll see what we can get into this week.
Cool.
All right.
Thanks, Corey. Thanks, everybody.
All
All right,
thank
y'all.
you.
See y'all
All
Wednesday.
right, good
Thank
night.
you.
Later.
Ciao.
All right.